As of right now, Thursday, March 19, 2026, SWMR Inc., trading under the ticker SWMR, is currently priced at $53.25 per share. We're seeing an intraday movement that is essentially a tug of war, with the stock oscillating between a low of $38.55 and a high of $65.04 in just a single session. This follows a mind-bending two-day rally where the stock surged over 1,000% from its initial offering price of $5. Most people see a move like that and assume it is just another retail-driven squeeze or a fluke of a low-float IPO, but the reality is much more clinical and, frankly, a bit more intense. While the market thinks this is just IPO fever, the institutional interest here is actually anchored in a very specific, high-stakes shift in how modern defense budgets are being allocated toward autonomous systems. We are seeing a massive divergence between what the ticker says and the actual underlying financial health of the company, which is exactly why this volatility is so aggressive today. When you look at SWMR through the lens of traditional online investing, it looks like a disaster on paper. The company reported revenue of just over $300,000 for the full year of 2025, yet it is currently carrying a market cap that is flirted with the $700 million mark. That is a disconnect that would usually send a value investor running for the hills. However, the expectation is that SWMR isn't being valued as a software company today, but as a critical infrastructure layer for the next decade of defense. If you go on most investing sites right now, you'll see people comparing this to the early days of high-growth tech, but the smarter play is to look at the backlog. SWMR has a firm commitment of $16.3 million in orders over the next 12 to 24 months, which is a massive jump from their historical revenue. This creates a curiosity loop for anyone watching the tape. How does a tiny firm from Austin and Ukraine suddenly become the hottest ticket on the NASDAQ? The answer lies in the 100,000 combat missions their software has already coordinated. This isn't theoretical code, it's battle-tested, and in the world of defense contracting, that combat-proven label is worth more than any quarterly earnings report. The trading volume today is sitting at roughly 22 million shares, which is staggering considering the entire IPO was only for 3 million shares plus an over-allotment. What this tells us is that the entire float is turning over multiple times a day. If you're using the Robinhood app or a similar self-investing tool, you're likely seeing those massive percentage swings every few minutes. This kind of churn is usually a sign of intense institutional activity masking itself as retail noise. Major players often use a Fidelity brokerage account or an Interactive Brokers account to move in and out of these high-velocity positions without tipping their hand too early. But the reality check here is that while the stock is flying, the company is still losing millions of dollars a year. Their net loss ballooned to $8.5 million recently. For someone looking at online investment for long-term stability, this is the definition of a high-risk gamble. Yet the momentum keeps building because the narrative, the expectation, is that the U.S. defense budget is about to hit $1.5 trillion, with a massive chunk of that dedicated to exactly what SWMR does. Let's talk about the actual motion of the stock today. We saw an opening at $40, which was already a huge premium over the $5 IPO from just a couple of days ago. Then it ripped to $65.04 as buy orders flooded the system. But then reality hit. Investors started realizing that the company's revenue actually declined 6% year over year in 2025. That triggered a massive sell-off down to the high 30s before buyers stepped in again to push it back to the current $53.25 level. This isn't just a stock moving, it's a battle between people who believe in the operating system of the battlefield and those who think the valuation is a total hallucination. If you're checking your SoFi Invest account or watching the Robinhood stock trading charts, you're seeing these vertical lines that look like a heart monitor. Comment below how many shares of SWMR you currently hold, or if you think this is a bubble waiting to pop. It's important to see where the community sentiment lies when the numbers and the narrative are this far apart. The institutional side of this is even more interesting. We're seeing a lot of movement in things like Fidelity ETFs and other tech-heavy funds that might eventually have to look at SWMR if it maintains this market cap. Right now, it's too small for the big Fidelity mutual funds, but the individual brokerage activity is through the roof. The participation from names like Eric Prince, who serves as the non-executive chairman, adds a layer of geopolitical weight that you don't usually see in a small-cap software IPO. It suggests that SWMR's path to revenue isn't just through traditional sales, but through high-level government partnerships and defense integrations. This is where the Interactive Brokers trading platform becomes a window into the professional sentiment. The bid-ask spreads are wide, and the volatility is being used by sophisticated traders to scalp profits while the retail crowd tries to figure out if this is the next big thing. To understand why this is happening, we have to look at what SWMR actually does. They aren't building the drones. They aren't worrying about batteries or carbon fiber wings. They're building the brain. Their Trident operating system is designed to be vendor agnostic. This means they can take a drone from a small manufacturer in Estonia and a drone from a massive US contractor and make them work together in a single coordinated swarm. In the world of online investing, software-first models are always preferred because they scale much faster than hardware. If SWMR can successfully license their software to 50 different drone makers, they become the toll booth for the entire industry. That is the expectation driving the price to $53.25. The reality, however, is that they currently have a very concentrated customer base. Almost all of their recent revenue came from a single company. If that relationship sours or that specific demand dries up, the revenue floor for SWMR is practically zero. Looking at the broader market, we see a lot of interest in defense technology. Stocks like AeroVironment, or even the big players like Nvidia stock and Apple stock, are often the safe bets, but investors are increasingly looking for pure play exposure. They want the high beta, high reward potential that comes with something like SWMR. This is why you see people moving capital out of traditional Fidelity wealth management portfolios and into more aggressive online investment strategies. They're looking for that one ticker that can do what SWMR has done in the last 48 hours. But you have to be careful. The gap between a $5 IPO and a $65 intraday high is a lot of air in the price. When a stock moves this fast, the technicals, like the RSI or moving averages, become almost useless because the price action is moving faster than the math can catch up. For the self-investing crowd using things like the Robinhood app or SoFi stocks, the temptation is to buy the dip every time it drops $5. But in a stock like SWMR, a dip can quickly turn into a total collapse if the market sentiment shifts. We've seen this before with high-profile IPOs that catch fire on social media. The reality of the balance sheet eventually catches up to the expectation of the future. Right now, SWMR is living entirely on expectation. They have $15 million in new cash from the IPO, which will help them hire more engineers and expand their sales team in Austin. They are positioning themselves as an American company with Ukrainian battle-tested DNA. That is a very powerful sales pitch for the Pentagon. If they can turn those MOUs into actual recurring revenue, then $53.25 might actually look cheap a year from now. But that is a very big if. The macroeconomic pressures are playing a role. With interest rates remaining a focal point, investors are becoming more selective. They're moving away from speculative tech that has no path to profit and looking for companies that have a clear, urgent use case. Defense is one of those sectors that is considered recession-proof because government spending doesn't stop just because the economy slows down. This is why you see so much activity in Fidelity IRAs and individual brokerage accounts moving towards these types of names. They provide a hedge against broader market volatility, even if the stocks themselves are incredibly volatile. If you're using a SoFi robo-advisor or an intelligent portfolio, you likely won't see SWMR in your holdings yet because it's too new and too risky. But for the active trader, it's the only game in town today. As we look towards the future for SWMR, there are a few key catalysts to watch. The first is the closing of the over-allotment option. If the underwriters exercise their right to buy more shares, it shows they have confidence in the price floor. The second is their first quarterly report as a public company. That will be the moment of truth. If they show that their backlog is starting to convert into actual recognized revenue, the stock could find a new, stable base. If they show more losses and stagnant sales, the reality expectation gap will close very painfully for anyone who bought at the top. You have to consider the risk of new competition. Companies like AeroVironment or even the big defense primes are all working on their own swarm software. SWMR's advantage is their data, those 100,000 missions, but data can be replicated if someone has enough capital and enough hardware in the sky. If you are navigating this through your Fidelity trading platform or searching for investment help, the best advice is to stay grounded in the numbers. Don't let the 1,000% gain blind you to the fact that this company still has fewer than